Welcome back to Golden Rule Radio. Is gold reversing or has the bottom been put in, Miles? That, I think, is the question, because we've had four bottoms right there in the 1680, 1700 range. We've had a nice little rally off that last bottom we put in there. Popped above 18. Now the last few days it's been sliding a little lower. So that is the big question. Was that last bottom all we're going to see on the downside, or are we going to see lower prices?
Or are we reversing?
Ooh.
I mean, we were up, about 120, 130 bucks off that last bottom, which, like you said, it was expected. It's been a pretty firm line in the sand for 18 months, 2 years now. Came back up, and last week we talked a little bit about this first range that gold's going to need to push through between the low 1800s and maybe 1875 on the top end, getting into the previous range. So what I'd like to see, if we're going to argue that 1685 reversal, which is not unreasonable to argue, bottom, middle to end of the summer, start climbing into the fall. When are the best months? Usually for gold. September, October, November, and then January. So it wouldn't be surprising to see us start stair-stepping up from here. But as I also mentioned last week, the bear market continues until morale improves, and we're going to need to see some higher highs that are relatively significant. I mean, we're talking back well into the 1900s to say turnaround. So long way to go before I can definitely answer you. But gold is back down to about 1765 off of coming into around 1800. So we did take 2 steps forward, 1 step back here over the last couple weeks.
And the silver action is very similar to gold. Popped up above 20, sliding a little lower in the last few days. The one thing to note is silver did create a new lower low. Around 18, 19, it did just basically come back down to where it had broken out from the beginning back in 2020.
Now, short term, what I want to point out about silver is we do seem to be taking a couple little stair steps here over the last couple weeks, because this recent drop in silver this week, which took us down to right now around 1980, is actually a little bit higher than the previous drop at the beginning of August. So we had that big run up right at the beginning of August, and now it looks like we're stair stepping up. And I still think we could see silver maybe push up a little bit higher, 2150-ish, and then we'll have to decide if it wants to go higher or lower.
On weeks like this where we don't have a lot of technical analysis to really take it from last week or the week before and say that there's something really new going on in the charts, I always want to step back from getting here in the weeds with the price action and just say that with all that's going on in the world, metals prices, I think, are a huge value. And it's not even just the price. Okay, day to day, week to week, maybe we go lower, maybe the bottom's been put in. With everything that's going on in the world, if you don't own some assets outside of the financial system, what are you doing? I mean, you just need to own something real, because things are getting absolutely nuts, wouldn't you say?
Yeah, Robert, I completely agree. I mean, we've got issues taking place over in Europe. We've got a former president facing potential problems here this week with his Florida residence and the FBI raid on his Florida home. So we've got issues here domestically that look unfortunate. We've got serious crisis taking place overseas. We've got a government who's talking about stepping into the crypto space with the US dollar here coming up over the next number of months. And we can have a much longer discussion about the concern of transparency in transactions when the government has the ability to, say, track a blockchain of all currency transactions in US dollars if the technology exists to support something like that. So having something, as you put it, outside of the financial system, I think that's the main reason anybody should be looking at precious metals. So sure, I like it when the price of gold goes up, I guess, because I own some, but I also don't like it when the price of gold goes up, because that means gas did, and food did, and clothing did, and insurance did, and everything else did as well. And I don't know a lot of people whose income actually keeps up with or outpaces inflation. So it's important to, A, have a means of locking in your purchasing power long term so that you know the money you're earning today will buy you the same amount of goods and services 10 years from now. And B, having something spendable, liquid, easy to get rid of in the type of crisis where, frankly, you just feel like your privacy matters.
Yeah, something that's just so crazy to me, Miles, is 100 years ago, gold was money. And here we are today. For the most part, I would say, generally speaking, most of the general public doesn't consider gold as a part of their portfolio. They don't either own it or they don't really know much about it. Oh yeah, dad had some coins or grandpa had some coins or whatever. And so we've gone in 100 years from gold actually being money and something that is capital to people completely not even informed about it. And they think it's just like an add-on, a small add-on to their portfolio. But in reality, gold should be the cornerstone or the ballast of your ship. It should be a primary part of your portfolio because, as Rob McLaughlin's talked about here on the show, gold is capital. And that's how I see it. Of course, I do this for a living. But the vast majority of people today don't even consider it. They don't know about it. They think it's weird. It's not even part of their portfolio. But not too long ago, it was the primary part of the portfolio because that was money. And I feel like that's going to change. It almost has to because of all the craziness going on in the world. It's a matter of what do you trust. But the education that you see about precious metals, not a lot of people are educated.
You know, what's funny about that is that's probably why a lot of the new buyers, I don't want to call them investors because I think that accidentally gets people thinking that gold is some alternative investment, which it isn't. You know, if anything, gold is just a form of real estate that you can put in your pocket and sell tomorrow.
Right.
That's it. Gold is much more akin to land ownership than it is stock ownership. But I think that's one of the reasons why a lot of the new people that are coming into the precious metals market, I'm finding, are not my age. They're 25. Because they're looking at their life over the last 15 years and they're seeing what happened to their parents' money in the real estate market back in 2005 and what happened to their parents' money in the stock market crash in 2008, 9, 10, and what happened to their money coming out with a $60,000 to $100,000 in-debt college degree for undergrad and then getting a $40,000 a year paying job and knowing that they're starting their life out indebted. And they know the system is just getting worse and worse and the inflation is getting worse and worse. So of course they're turning to things like Bitcoin and other alternative assets, not alternative investments, not because they're looking, granted some are, but a lot of these young people I'm talking to nowadays are actually looking for a way to preserve and grow money over the next 60 years of their life. So what are we seeing? They're looking towards these alternative assets.
Yeah, I don't even consider gold alternative. I consider it primary. But something else I wanted to bring up that I think I've seen as a trend talking with clients and new people coming to us in the last 6 months is I've had a good handful of brand new people referred by someone. They come to the table, come to the conversation, and their explanation, generally speaking, is I told my financial advisor I wanted to buy gold. And they said either don't buy physical, we'll buy gold for you in your portfolio, and they buy GLD. And they say, we've taken care of that. Well, these newer people, there's no convincing them that they need to buy gold. They're already convinced, and they've never even really had a conversation, doesn't seem like, about buying physical gold. But they're convinced that that's what they want to do, and their advisor's not listening to them because they don't want to lose the account. They don't want money to leave the account and go buy gold and bury it in their backyard.
You don't get paid for money you're not managing.
That's right.
Yeah.
So it's a little bit of self-interest there and philosophically or a bias toward the stock market. But what I'm finding is there is no need to even discuss with them why they need to own it. They're looking around all these crazy things that are happening, and they've already sold themselves and convinced themselves they need to get a good chunk of their money out of the system. They know they want physical gold. So their advisors aren't listening to them. They end up asking friends and whatnot. They talk to us. And it's not, why should I buy gold? It's, what kind of gold should I buy? How much silver? Maybe some platinum. And it's like going from not starting at step one of why you should do something. It's like, well, let's talk about allocation of how you should do this. That's somewhat new, I would say, in the last 6 months. I think the stock market going down has obviously gotten some people concerned who are thinking that it's going to go lower, and it probably will. But that's just something new that I'm seeing.
Yeah, it's one of those things where the general investment consensus is so against it that people are starting to wake up and have to do their own research. And it's amazing when somebody does their own research because they take ownership of what they've learned.
That's
and
right.
I completely agree with you. It's been fascinating to watch that difference compared to, say, 15, 20 years ago when you and I first came to work here. Just how much more educated people are on larger scale economic issues and the best way to protect themselves.
So we can help you protect yourself. We can make some allocation recommendations of how much silver makes sense depending on whether it's in an IRA, whether you're taking possession of it. Because, I mean, taking possession of a lot of silver, yeah, it's a little different.
It takes up
than,
some space.
I mean, what, 20 grand in silver is like the size of a bowling ball and weighs 55 pounds, whereas 20 grand in gold is like the size of a roll of nickels. So vastly different. Depends on if it's qualified IRA money or non-qualified IRA money. But we have recommendations we can provide to you if you want to give us a call. The number is 800-525-9556. You can find us on Twitter at ICA Gold. Like us on Facebook, McIlvany Financial. Our website, McIlvany.com. Click the subscribe button below. Give us a like. And thanks for listening. Have a great week.